Alright, hey guys, welcome back to Sun Crypto. In today's content now we'll talk about BTC once again. We're breaking out above the monthly time frame, right? As we've been saying over the last few months, if BTC closes above the monthly 21-EMA, most likely bulls going to be pretty aggressive, going up to like a 32, 40k area and all that good stuff. So we'll take a look at all those price levels, right? Because most likely most bears going to be FOMOing. Most bears been waiting for like a 9k, 10k, 3k, 1k and all that good stuff. So now BTC is above 30k. It is going to be pretty tough to get another move back down below the 15k area, right? And all that good stuff, right? So now let's dive into the analysis. Okay, so the monthly 21-EMA, we broke out above it last month, closed above it just about like a 28k, right? So right after the close, price action dipped a little bit down to the 27k area. Most bears been saying like, oh, we're gonna dump it down to 25, 23 and all that good stuff, but price managed to stay above the 28 and 27k area, right? So the 28.5 give or take up to 29k area was a strong resistance. If you recall, back in the summer, right, 2021, right there we did have a massive support, right? So that support turned into a big resistance. Even back in here we did have a massive support. We talked about it back in 2022, right? Back in April 2022 when we dumped down to the 25, 26k area and push back up to towards the 32k area, right? So now the 50% pullback, it is at 32k. So will we close a monthly candle above 32k? We will see. It is going to be pretty challenging. We'll take a look at it on a lower degree. After that, we could be looking for the 0.618 Fibonacci at 40k level, right? Just about this range, 40k, 39 to 40k, right? Give or take, right? The quarterly resistance, that's going to be the big challenge for the bulls. If we get enough bears flipping bull, right, the trend can definitely be pushing much higher up to the 50k area. So but we will need enough buyers to basically increase the volume, and we could be seeing like a 45, 48k, just like what happened back in Q2 2022, right? When we got rejected at 48k and most bulls were looking for like 100k and all that good stuff, and we were bearish right here. Okay, we said, guys, we're most likely going to be reversing. Whenever BTC retests its monthly 21-EMA in a 4-year cycle, it tends to break it. It tends to break it in all previous 4-year cycles, right? Whenever we retested our monthly 21-EMA, we dipped down 50% below it. Okay, and we talked about it back in 2022, right? Even 2021 when we were bearish at 60, just about like a 58, 60k area, we said the directional move, the macro directional move, going to be the quarterly 21. If we hit our quarterly 21-EMA, you don't need to be bearish any longer, right? We just have to be accumulating the dips. It could drop lower, but the move could surprise you, meaning like it could pump out of nowhere, like, and you might be waiting for like a 9k, 8k, 7k and all that good stuff. You might be waiting until basically 2020 2030 or something like that, right? 2030, right? So going back to the monthly looks good. Let's take a look at it in terms of volume. We haven't been talking about the volume for a while, but the volume on Binance is incredibly bullish. Okay, and we talk about it. You don't expect like your volume to be increasing like forever just like that. Okay, at some point we're going to get some low volume right here, and by the time of the 4-year cycle finishes, right, we're going to get another big volume right here. That's how you draw your trend line when it comes to the volume, right? Like that. But you don't expect like the volume to be increasing, right? I don't expect the volume to be increasing for the next like 3 to 6 months. We're most likely going to get like lower volume when we're going to be correcting during the summer, going into like the Q4 2020, 2023 and all that good stuff, right? So now let's take a look at BTC on a 3 weeks basis. So if we take a look at BTC on a 3 weeks time frame, as I said right here, after we close the last 3 week cycle, right, we opened the current 3 week cycle around like the 26th, right? So most bears been waiting for like lower prices, but what I was saying was like it is going to be pretty tough for the bears to retest the previous 3 week cycle lows or even open, right? The previous cycle opened right around like a 22k, right? And after we closed just about like a 27, I was like, that is it, okay? The lowest we could get going to be 25k, 26k, but bulls might want to front run it at 27. The reason for that was like the deeper we were going to go into April, right, the hardest it was going to be for bears to get any strength, right? Because the 50-day cycle was going to open like on the 11th. So, and I said it in my premium group, in our members group, I said, if the 50-day cycle opens, right, we're going to get some upside volatility, right? And within the next 50 days, bulls most likely going to remain in control, right? I just don't see like BTC losing momentum all the way down to like a 16k, 15k within these 50-day cycles, right? Because the 3 week cycle is already bullish, right? The only way bulls going to lose control is like the next 3 week cycle, right, going to open on the 16th, right? Let's say starting on the 16th, right, we close the next cycle, right, just about like a 26, 27, right? Yes, that'll create an an engulfing candle on the 3 weeks time frame. And most of the time, whenever we get an engulfing candle on the 3 week cycle, we know we're going to be dumping lower, just like what happened back in June 2019 and multiple times during the 2018 bear market. You can see we got one right here, right? Got one right there, May 2018. It's almost May 2023, right? We got one like July 2018, June 2019, right? And I was bearish right here, June 2019, after we retested 13k and all that good stuff. February 2020, I called this top, and I was like, okay guys, it is a bearish reversal top formation. That's what we had right here, and we're creating another lower high with the same pattern, meaning like an engulfing candle on the 3 week cycle. So the only time I was not bearish after we created the engulfingness on the 3 week cycle was like back in August 2020. And the reason for that was like we were retesting our weekly 21-EMA right here. We were retesting our weekly 21-EMA, and in early, I think that was like early September 7th, something like that, right? We were just about like the weekly 21-EMA at the same time. So most bears were waiting for like a 9,700. So market is repeating the same thing. Okay, whenever we get close to the bottom, some bears gonna be waiting for lower prices, like 15%, 10% lower, stuff like that, and they're going to miss like 150%, 200% move to the upside, right? And we said it right here at the bottom at 18k. If you recall, I was saying like 16.2 at the monthly 100 EMA going to be the support range, first target range support on the macro level. However, it is better to be buying at 18k and 17k and not wait for 16k and just let it drip. If it dropped below 16k, great, we got the monthly 100 SMA around like a 14k. But the best thing to do is like just to front run those macro prices. If you're waiting for 20k, you might want to be buying like a 20k plus minus 10%. If you're waiting for like, let's say 50k, you might want to be selling 50k plus minus 10%, 45k and onward, right? If you're waiting for 35k, you might want to be selling 32, 33 and all that good stuff. You don't want to be looking for the absolute top, because market will not reverse like in one day. It'll take like a 3 weeks, 1 month before it prints a top formation. You see what I'm saying? So I do not expect within the next 2 days, 3 days, right, BTC to come down to like a 16K. And I know most bulls, you know, or even like most bears going to be saying like, oh, we're going to be dropping down to the, you know, 15K, you know, and all that good stuff. It is a bear market rally. Yes, it could be. It could be a bear market rally. However, we already gotten our 12-month bearishness. Okay, and after a 12-month of bearish downtrend, there is no need to be extremely bearish on BTC. And we said it right here back in November. If you've been following the channel, 12 months of a, you know, of a downtrend, 50% capitulation below our monthly 21-EMA. Those are the only two things you need in a 4-year cycle to flip bullish, right? But if you're waiting for the absolute bottom, like 10K, 9K, 12K, when price hits like a 15K, I mean, I don't know, okay? I don't know, okay? I don't know what to tell you, right? So it is going to be quite aggressive to flip bull, right, above 30K. Okay, so just bulls just gotta be, I mean, bears just gotta be cautious flipping bulls, right? Flipping bullish, because if we get any shakeout down to like a 30K, I mean 28K, 27K, they're going to be panicking and all that good stuff, right? But the thing, you know, the thing to remember is like the macro trend, it is still bullish, right? Over the last 6 months, 5 months, almost 6 months, right? In 2 weeks, it'll be like 6 months since our basically a November lows, right? And we could be pushing all the way up to like a May, June 2023, okay? But in about like a 2 to 3 weeks, it'll be like, you know, 6 months of an uptrend from the lows, right? What we had back in 2019 was like a 6-month uptrend, and I remember exactly when BTC was right around like, you know, 3,500, 3,700. So many bears were saying like, oh, we're gonna dump down to like, you know, 1,500. Okay, we're calling for like another 50% drop after we just dropped like a 50%. BTC doesn't drop like 50% and drop another 50% right away. Okay, so most of the time, if it drops 50%, it'll take like I would say even like a 6 to 9 months, you know, before you see another big drop, and it hasn't done it yet. Okay, meaning like capitulating 50% below the monthly 21, and then capitulate another 50% after that. Okay, let me show you literally what I mean, right? So you can see like how we capitulated right here, 50% below the monthly 21, just about like a 40, you know, 421, right? $421, dumped down to like around like a 180. We did not drop another 50% after that. You go ahead right here, we dropped 50%, right? Did we drop another 50%? No. Right here, we dropped 50%. Did we drop another 50%? No. Take a look at it right here. We dropped 50%, right? From 3,500, right? 3,500 BTC. I sound like a savvy right now, okay? 35,000 BTC, right? All the way down to, you know, all the way down to like a 17.5, exactly, 50%. Did we drop another 50%? No. Okay. Did we even drop like more than you know, 20%? No. We only dropped like 8% below the lows, right? From 17.5 to just about like a 15.5 was like a 10, you know, just about like a 8-12% move, right? But most bears been saying like, oh, we're gonna drop 50%, we're gonna drop 60%, we're gonna drop 80%, right? And all that good stuff. Paying attention to the macroeconomic data and saying like, oh, you know, recession gonna be coming in, you know, the Fed gonna be increasing rates and all that good stuff. Yes, the Fed already increased rate almost like to 5%. That's done. I don't think they will go up to like a 5.5%, 6%, 7% and all that nonsense, right? They're not gonna go that high. Right, so it was better, right, to anticipate the reversal right after the Fed started to decrease rate around like a, you know, let's say 50 basis point. That's when we started to reverse rally. Back in November, after we the Fed basically increased, I think like 75 or 50%, right? November or December, one of them, right? So I think November was like a 50%, right? 50 basis point, not 50%, right? So that's when we started to reverse. But most people were waiting for the Fed to say, hey, we're not going to increase the rate any longer, right? So, but just, you know, bears just got to be cautious into the summer, going into the summer, right? Because my thesis were like we could be bullish in the first half of 2023, right? And in the second half of 2023, we don't know what we're gonna get right here. Okay, we don't know what type of pattern. Okay, let's say we pump all the way up to 50K for the sake, for the sake of simplicity, right? We pump all the way up to 50K. The next pattern we could get in the second half of 2023 could be either a sideways correction, right? Just to stay above the monthly 21. Remember, the monthly 21 EMA is right now at almost 28K. So let's say the monthly 21 EMA going to be hovering around this level, right, for the next like a few months. Price action could just decide to decides to be at or around the monthly 21 EMA for the following 6 months after the pump, right? And you're gonna be telling me, Sen, why are we going to be moving sideways afterward, right? After pumping like 150% to 100% and all that good stuff, right? If we go back to 2015, that's what we had. After we broke out above the monthly 21, we moved sideways, right? Started like October 2015, and we did not break out till May 2016. You see why May is so important. Sometimes the month of May, it can be a turning point. Not sometimes, but most of the time. April, May, depending on the cycle, April, May, September, November, and December, those 5 months, they are very important depending on how you're looking at the cycle. Is it a bearish cycle? It is a bullish cycle, right? In a bearish downtrend, April, May, they tend to be what? Very bearish, right? Especially in May, in a macro downtrend after hitting like an all-time high, right? In a bullish uptrend, April tends to be a bullish month. After we find our macro bottom, April tends to be a very, very bullish month, right? So something to keep in mind. So we could either print this pattern where we move sideways for like a 6 month, right? After it's more than 6 months actually, Leroy, right? 7 month, okay, broke out like in May, 8 month, right? So we could move sideways, let's say 6 to 8 months after breaking out, breaking out above the monthly 21 EMA, right? The other type of pattern is like to print, right, what we had right here. Okay, let's say that's the move we are printing right now, okay, from like a 3K to 14K. That is our current move, possibly from a 15K to a 50K, give or take, right? 40K to 50K, Leroy, right? And what we had afterward was like another downtrend right here. It's not a wedge pattern. I'm just drawing it like that, right? For Leroy to understand, right? To understand like it is a downtrend, right? So we moved sideways for like a 9 month afterward, right? From like a June 2019 all the way down to like a March 2020. So could we print another pattern just like that right here where we move sideways? Okay, where we move sideways for like a 6 to 9 month, that's possible, right? So we don't know which one of these pattern, okay? Market most likely going to be printing out, okay? It could even retrace all the way down to like 15.5. And I know most bears gonna be saying like 10k, 9k, 8k, and all that good stuff. If you're looking for BTC to go all the way up to 100k to 100k, it won't make a difference between 15k and 10k. Okay, it won't make a difference between like a 17k and 18k on the macro scale. I'm not talking about like short-term trading on the 15-second charts, on the 5-minute chart and all that good stuff. It makes a big difference between a 15k to even like a 15.5. So depending on your leverage, right? But I'm talking about like 6, 9, 12, 18 month time frame, right? 15k to 18k won't make any difference, right? Just like a 3k up to 3500 was even a bigger a bigger percentage move, right? From 3,000 all the way up to 3,700, right? That's over 20%, right? So if you're waiting for BTC to retest like 10k, if you get another shot, I'm not saying you will, I'm not saying you won't, right? Depending on whether you're bullish or bearish, right? But all I'm saying is, if we ever retest these lows, bears just have to be very open-minded and not be looking for like extreme lows, because we haven't seen it yet. So I cannot basically just vouch for a retest of like a 3k, 2k, and all that good stuff. On the monthly time frame, if we take a look at it at the same time, you can see like the monthly 100 SMA right now, it is at 14k. It is at 14k. So, and it could be above like a 15k within the next like a 6 to 9 months. If we couldn't break our monthly 100 EMA like for like a 6 month, I don't think we will break through our monthly 100 SMA in one go. Even if it does, it might only correct, right, in time. I mean, not in time, but in price, meaning like it could just wick down below 14k for like 2 days or so, right, and then bounce right back up like what happened right here back in March 2020. So you got to keep that in mind. So you have, as of now, we just don't have enough time, right, in terms of like a 4-year cycle, because we already completed like 1/3 of the 4-year cycle. The 4-year cycle is what, Leroy? 48 months, right? We already completed over 16 months, so that's already 1/3 already gone, right? And the next 16 month following the first accumulation phase, could be very challenging. Could be very challenging depending on how you're gonna get your first wave. Because all I'm looking at it in terms of like an Elliott wave is like the move we're making right here. It is wave 1 of our next macro bull trend. The next correction phase, that's a big question. We don't know what we're going to get during our next bear market. Okay, so you have to define your time horizon, right? Meaning like, what time frame are you looking at? Are you looking at the 4-year cycle, or are you looking at the 6 to 9 month cycle? Because BTC moves in cycle. Most people tend to basically just say, oh, the 4-year cycle, but we got multiple cycles within the 4-year cycle. Okay, we got multiple 4-year cycles within the 4-year cycles. Okay, we got multiple mini cycles, multiple mini cycles, right, within the same 4-year cycle, right? For instance, this cycle right here, that's our entire 4-year cycle right there. December 2018 all the way up to November 20. Let's do it like this for Leroy. December 2017, right, all the way up to November 2021. That's 4 years, right? But take a look at it in terms of like a cycle. How many cycles you got within your 4-year cycle? All right, you got a bear cycle, right? You got a bull cycle, right? So this cycle was what, 12 months. You got 12-month cycle, right? After that, you got what, another 6-month cycle, right? So you got another 6-month cycle right here, right? Your next cycle was another bear cycle. You got a 9-month cycle, right? Right there to retest your low, right? Right after that, you got your big cycle right here. That's the most important cycle right here. That's your wave 3. Right? And take a look at it afterward. I know it's very colorful, but you get the concept, Leroy, right? You got another mini bearish cycle for like a 3-month cycle, right? That's our wave 4. Another 12-month cycle, right? That was the 12-month. You got mini bearish cycle, 3 months. Right? And finally, you got your wave number 5. This one was a 6-month cycle. Right? So how many cycles do you have right here? You got 1, 2, 3, 4, 5, 6. Just like Elliott wave, right? But in terms of wave analysis, you want to start your cycle from the bottom right here, back in 2018 at the bottom, right around like a 3K. And you can see like we got 1, 2, 3, 4, and 5. Pretty easy, right? So in terms of BTC, right, you just don't know what type of pattern we're going to be creating right here. This could be our wave 1, and we could get our wave 2, something like that. Once again, I'm not saying it'll drop this dip, okay? I'm just trying to show you guys, you know, what type of, it could be something like that. It could be, you know, retesting the bottom, but let's just put it in. Let's just do it like that, because bear is going to like it if I do it like that, right? Bear is going to be jumping and humping if I put it like that. So let's just do it like that, right? And we could get our next macro cycle like that. Another one just like that. Right? And possibly something like that. Okay? So something like that, right? And we could be pushing all the way up to like a, you know, 180 and all that good stuff, right? So something like that. So something to keep in mind within the next like a few months, you have to basically pick your cycle, because we're already in a bull cycle. We're gonna get another bear cycle. The next bear cycle, as I just been explaining over the last 5 minutes, it is going to be bearish, but it's not going to be bearish based on our previous macro bull run. It is only going to be bearish based on our most recent mini bull run. So you cannot be drawing all your fibs if you just started to learn like when I first started to learn about Fibonacci. I used to draw all kind of crazy Fibonaccis, right? For instance, like I used to draw my Fibonaccis from like right here, right, all the way up to 20K, right? And we're saying like, oh, we could drop down to $100. So when I see people saying like, you know, BTC dropping down to $100 and all that good stuff, I know exactly how they're thinking. Until you understand these 4-year cycles, right, you know, it won't make sense to you. You're going to be like, oh, we got 1, 2, 3, 4, 5. We're going to be pushing back down. But in terms of Elliott wave, you can get infinite amount of 5-wave structure. Okay, you can get infinite amount of 5-wave structure. It might sound very complicated, but the number of 5-wave structure you're gonna get on the macro level is infinite. It could go to infinity, right? Meaning like, you know, you're gonna get 1, 2, 3, 4, 5, right? That's your wave number 1, and then you correct down, and you're gonna get another 1, 2, 3, 4, 5, right? Right? Something like that, Leroy. Right? And you're gonna correct again. Right, get your correction, push to the upside again, 5-wave, right, correct again, but you're never going to draw, right, your Fibonacci from the bottom to the top. You're always just going to go with the cycles, right? Meaning like your first 5 waves, you just draw your Fibonacci and wait for a retracement, depending on which moving averages, which one of the moving averages you want to trust. You wait for them. Price action going to retrace. You ride the next wave, push to the upside. After that, you move your Fibonacci once again, right? And look for another support, right? And then after that, move your Fibonacci once again, right? Look for another support. But you never, okay, want to basically draw your Fibonacci from the absolute bottom, like a 1920, right? 1930, if you're using the S&P 500 and drawing your Fibonacci. You can't do that. That's why I'm saying you could get like infinite amount of 5-way structure. So you just have to define your cycle, because after a macro correction, you get a new cycle. Within your macro correction, you already got your 5-way structure, so you're done. So Elliott wave doesn't tell you like you have to count your 5-way structure from like a 1800 or like a 1677 all the way up to like a 2023. It doesn't make any sense. It doesn't make any sense, right? So a good example is like, let's take a look at the Dow Jones, right? So if you take a look at the Dow Jones, right, are you going to be drawing your Fibonacci's, right? From like a, right here, okay? Are you going to be drawing your Fibonacci's from right there? Right? No, you're not. Okay, that's not even like, that's like a 1877 all the way up to the top and say like, oh, we're going to drop down to 2000. Man, you're going to be waiting forever. You're going to be waiting forever. Even though I can count clearly 5-way structure, 1, 2, right? That's 3, 4, and 5. I can count it like that, but you don't want to count your 5-wave like that, because you're going to be completely off. Because these cycles, right, even though, they represent like, all these waves, right, they represent 5. You can count it as 5 waves, but you don't want to be counting it that way, because it won't make any sense. It won't make any sense, right? So you just want to take this cycle as your first cycle. Right? That's your first cycle. You're done. You draw your Fibonacci, right? You pull back down to 0.786. That is it. That cycle is done. You don't want to include it to any other cycle, right? And afterward, right, you might look at the next cycle just like that. Okay, from here, right, to even here, it might be one cycle, right? Because you just don't know, right? Or from here to that level, all right? And you can see that you did not even retrace deep. You probably retraced like a 20%, right? But if you are waiting for a retracement from this point, to the .com bubble and all that good stuff, and waiting for like a 1500 and all that good stuff, you're never gonna get it. You're never gonna get it, right? So this range, right, might have been good range to be looking at it, as a 5-way structure. And sometimes you don't even retrace that dip, because your moving average is going to basically prevent the price from dumping down below these lows, right? So after that, you started a new cycle from this point, just about like a 600 all the way up to a 11,000, the .com bubble right there, right? That's your cycle. And if you try to do something like that, you would have gotten wrecked, okay? Because your moving average is going to prevent the price action to dump below these lows, okay? So if you're expecting like the NASDAQ, right, the Dow Jones, right, to be dumping down to like a 7,000, you might be waiting forever, okay? You might be waiting forever. All right, so we'll see. All right, might just follow these moving averages, right? The monthly 2-1, the monthly 50. For the worst case scenario, the quarterly actually, okay? The worst case scenario could be like the quarterly 50. Right now it is at 23.8, and I don't even think we will drop that low at any given time, right? Because we're talking about the quarterly time frame. Okay, so we have to take out the quarterly 21 first before we even talk about like a macro reversal, right? So could we get a double top, double bottom right here, wait for the quarterly 21 to join the party and retest it before moving higher? That's possible. So we could be in a sideways correction for the next like 2 to 4 years. That's possible, or even 5, 7 years. I don't know. But one thing I just don't want to see like people screaming right about is like looking for like 20,000 Dow Jones and stuff like that. Okay, so hopefully it makes sense, right? Hey, what's up, Matt? Thanks a lot for tuning in, man. It's been a while. We got Brandon in the house. Thanks a lot for tuning in. We got Quiet Cook cooking some ADA in the kitchen, pushing up in the kitchen, dumping all the USDT down the drain, and watching some crypto. Thanks a lot for tuning in. Right. So hopefully it makes sense. Like, I know sometimes like it is easy to just take a look at the chart and make any type of macro calls, right? But sometimes these macro calls, they have to make sense, right? Even if you take a look at the Dow Jones right here, we do have a 5-way structure right there. 1, 2, you got 2, right? You got your double wave right here, 3 and 4 and 5, right? But are you going to be drawing a Fibonacci from this low to that high? I don't think so. You don't want to do that, right? Even if you drew your Fibonacci like from the low right there up to the COVID highs, you can see we didn't even retest our 382 Fibonacci. So why would you think like we're going to even retest like a 382 Fibonacci, right? Around like 18,000, 19,000. Okay. So when it comes to the Dow Jones, right, the best thing to use, right, on the macro level, it is the quarterly 21 EMA. The worst case scenario could be like, the quarterly 50. Right here, we retested the quarterly 100, right? But that was after a big double top. So we did not just retest it like from from like a 10,000 and dump all the way down to like, 3,500. Right, the quarterly 21 back in 2000 was right around like 3,000 area, right? So, but we didn't. We basically moved sideways and not the quarterly 21, but the quarterly 50. We moved sideways for like 7 years, right, before retesting it. So we could move sideways also for like a multi-year. I mean, 5-7 years before retesting the 50. If we get a big capitulation, we could retest it. But I don't know. I don't know which one it will print out. So if we go back to BTC, let's go back to BTC USDT. Okay, so I know it looks choppy and all that good stuff, but most of you guys got the concept with these cycles and all that good stuff. Okay, so now let's take a look at BTC on the low degree. So on the low degree, you could look at it in multiple different patterns. Okay, if you don't want to use Elliott waves. But let's start up with the Elliott wave pattern already. Okay, first thing first, because we already talked about it already back in back in the summer, right? We talk about it in terms of a WXYXZ correction. We said it is a 5-way structure to the downside. How do we know it is a 5-way structure? Because it is 5, right? Just because it is 5, it doesn't mean it is a continuation pattern. It is just a 5-way structure. So it is up to the trader to define, is it a 5-way structure in terms of impulsiveness, or is it a 5-way structure in terms of correction? Okay, those two are two different type of concept. Whenever you use WXYXZ correction, or you use like ABC correction or WXY correction, right? I mean, let me rephrase it, okay? whenever you use letters, okay, you're correcting. Whenever you use letters, right, you're correcting. Whenever you use numbers, you're basically moving impulsively. Right? What does it mean? Okay, it means, for instance, the move from like a the move from 3K back in 2018 up to a 70K area, give or take, was impulsive. The entire structure was impulsive. However, within that impulsiveness, right, you got some corrections, which is right here. You got W, X, and Y. You see the difference? We got our wave 2 in WXY, right? And we got our wave 4, right, in WXY also. You got W, right? You could get your, W, X, Y correction right here in 3-wave, right? And you got your 5-wave structure right there to the upside, final 5-wave structure. So on the downside, we also got a 5-wave structure because it was a 12-month cycle, very choppy, right? In terms of impulsiveness, we did get some impulsive move, like 50% move, but you just have to understand the entire concept, because you might be saying like, oh, we got impulsiveness right here from 32K to 17K. Yes, but the overall structure from like a 70K to a 15K was corrective, very slow, very choppy, nothing smooth like the move from 10K up to 60K. You see how smooth it is, very smooth. Okay, you can see how smooth it is right there, like a 3K up to 10K. You can see how smooth it is right there from 3K to 14K. We didn't have anything like that. Okay, that's why I was using WXYXZ correction. If I had to use like 1, 2, 3, 4, 5, it meant like BTC, could have been BTC going to push back up, right, for a reversal in a WXY correction and basically continue the downtrend and print a zigzag formation, a macro zigzag formation like that. Okay, so whenever you say correction, remember, whenever you say correction, you have to use letters. Okay, so you could use a W right here, a Y right there, and a Z right there. And within your macro correction, yes, you're going to get some impulsiveness, 1, 2, 3, 4, 5, but the overall pattern, right, would it be a WXY? That's why I refuse to use like 1, 2, 3, 4, 5 to the downside and just stick with my WXYXZ correction till it's invalidated, right? So if you don't understand WXYXZ correction, you might want to learn it, because it'll help you over the next like a 6 to 10 years, because BTC always corrects in a WXYXZ correction. So if you want to use 1, 2, 3, 4, 5 waves correction, right, in a macro downtrend in a 12-month cycle, it's gonna fool you. Okay, it's gonna fool you, because after you count a 5-wave structure, you're gonna be like, this move right here going to be an ABC. And if you count an ABC, you will be forced, right? If this is an ABC, you will be forced to count another 5. Do you see what I'm saying? Right, let me just do it like that, okay? For Leroy, let me just remove everything. Okay, so let's say you get a 5-wave structure. Since like we're talking about a downtrend, right? Let's say you got your impulsive move like that, 5-wave structure, right? And you're looking for some sort of correction to the downside. You're looking for some sort of corrections to the downside, but you don't know what type of correction you're going to get, right? Right, but market starts to print something like that. You'll be like, oh, that could be a zigzag, and sucker pump right back up and give you another move. You're gonna be like, oh, now we got 5 waves. But how do I define the 5-wave right here? That's a big question, right? How do I define it? Should I read it as a WXYXZ correction, or should I read it as a 1, 2, 3, 4, 5? Big difference, okay? Big difference, right? I mean, if you know what you're doing, it's not a big difference, because you can always alter between these two, right? And change your mind, because you know exactly what you're doing. But if you don't know what you're doing, and you say 1, 2, 3, 4, 5, and we start to push back up to the upside like that, your first instance is going to be like, oh, it has to be an ABC correction. It has to be an ABC correction. Why? Because you previously counted 5-way structure. You previously counted 5-way structure. So you're going to be like, that is an ABC correction, because what are you looking for after that? You're anticipating another 5-wave down. Right? You're anticipating another 5-wave down. So you see why most bears, right, are getting fooled by the structure. Right? Let me just do this for Leroy. Okay. Okay. You see why most bears are being fooled, right? Because they're counting the wave, this wave, as 5-wave. And now they're saying it could be an ABC correction, and after that they're going to be looking for another dip down to the 3K, 5K area, because they're anticipating an ABC correction overall. This entire move, you could look at it as an ABC or a WXY, depending on how you want to look at it. However, if you understand what you're doing, right, even if you count this as an 5-way structure, you can alter it later on and say, okay, it's not a 5-way structure. It is a WXYXZ correction, because after a WXYXZ correction, you just have to basically push back up. Okay, I mean, you don't have to. You can still get an ABC correction right here and another WXY correction, but it is easier to say WXYXZ correction, finalizing your final wave right here with a divergence between your wave Y and Z. Right, and basically look for a macro reversal to the upside, okay, to break your previous high right there, to break your previous high. Like that. Okay, the type of wave you're going to get right here could be any type. Okay, you could get very choppy 5-way structure. It could start with a leading diagonal, right? It could start with a leading diagonal. You push back down, retest the top and all that good stuff. But the most important, what I'm trying to explain to you guys is, like, you just have to understand WXYXZ correction. If you master WXYXZ correction, you're good with BTC. I don't know about alt because those guys are crazy. But if you understand WXYXZ correction, you're most likely going to be good for the next like a 6 to 10 years, because BTC always, I wouldn't say always, but most of the time, right, it corrects in a WXYXZ correction type of patterns, right? Hopefully it makes sense, right? Hopefully it makes sense, Leroy. So let me know if it makes sense, right, or if you have different view. We got Brandon cooking some Zilica in the kitchen. Thanks a lot, Brandon. Thanks a lot for tuning in. We got Tel. Thanks a lot for tuning in. Good stuff. What's up, Baibu? Thanks a lot for tuning in, man. Baibu, hopefully you're doing okay, right? And all that good stuff. So, guys, if you want to join Sun Crypto Premium, link of the Discord group in the description. Okay, we've been pretty spot on, guys. Like on the macro level, I'm not saying I'm always right, but I can say at least for the most part of the bear market, right, from like a November, in terms of time, we're nailing every single time analysis. I don't do like time analysis like every day and looking at like BTC on the daily and all that good stuff in terms of time frame. But on the macro level, 6 to 9 month, okay, 12-month cycle, we've been pretty much spot on. Even like back in June 2021, that's when we started to talk about like the monthly 100 EMA. We never retested the monthly 100 EMA, but we said if we hit the monthly 100 EMA, there is no need to be extremely bearish. We said it back in 2021, June 2021. Okay, it was a premium update. We still got that video. Okay, and November 20 2021, right, this January 2022, we started to talk about the quarterly 21 EMA, right? Most of you guys never heard about the quarterly 21 EMA, right, until you started to watch Send Crypto and all that good stuff, right? So we started to talk about the quarterly 21. We hit our quarterly 21 EMA target, 21K plus minus 10, right? You know, now we're reversing back up. We hit it right here. We talk about the monthly 100 SMA. We didn't get to the monthly 100 SMA. That was our secondary support. Never got the chance to retest, but could retest it within the next like a few years, or just about the next few months, right? Depending on the next bearish strength. Yeah, so hopefully it makes sense and all that good stuff, guys. So looking pretty good, right? Looking very, very good in terms of wave analysis, right? So let's take a look at Ethereum really quickly. The Ethereum dominance is above 20%. Now that's Ether BTC. Let's see. Yeah, it is above 20%. Okay. The Ethereum dominance is Ethereum right now is wrecking the alt, right? Alt got wrecked by BTC. Now they're losing value against Ether, right? So that's not good at all, right? So you see Ether pushing up, right? Yeah, and you might be like, oh, Ether is in a bull reversal, but against BTC on the monthly basis, yeah, it is pushing back up above the monthly 21 EMA. But I just don't know if Ether will be breaking, the 0.08, 0.09 and all that good stuff, right? Because BTC looks like it is going to be strong for the remaining, BTC alt, right? Going to remain strong over the next like a 6 to 9 months, right? So just have to be very cautious if Ether hits like a 2500 range, which is at 50% pullback, just about right there in terms of Fibonacci. It is breaking out above the monthly 21, and it has its monthly 21 SMA, just about like a 2300 range, right? So we'll see that 2500 range going to coincide with 50% pullback. So I wouldn't be that bullish on Ether, if we hit that level, right? On the weekly, as I said, it looks pretty good on the weekly, because if we take a look at it on the weekly, we're above our weekly 25 moving average, and Ether above the weekly 25. If you've been following our channel long enough, we said it right here back in almost a year ago, right? Over a year ago, we said it above the weekly 25 SMA, right? It is bullish, so it stays above it, right, for the last few days, weeks, month, right? So until we break out below the weekly 25 SMA, right, it might not be in a strong downtrend, even though it can print a resistance right here, but you just don't know if that resistance is going to hold. But it is going to be a speculative resistance, 50%, because 0.618 going to be all the way up. Let's take a look at 0.618. 0.618 going to be at 25 range, okay, 2500, right? 0.786 going to be all the way up to like a 3500. So I'm not sure if Ether going to be strong enough to get to that level 35. It could, but just have to take it step by step, because if we anticipating BTC to get some sort of rejection in May, June, if Ether is going to go up to like a 35, it has to do it very quickly. It has to do it like within the next like a 4 to 5 weeks, right? And get up to like a 3500 if it is going to go that high, right? But after June, I don't think we will be closing a monthly candle above like, let's say above like a 2850, stuff like that. So 2550, that range, 25 range, going to be a critical level to watch on Ether. If we get more bullishness, you know, and invalidate the potential rejection right here, potential reversal, you know, yes, we could be looking for 0.786. And the monthly MACD, it is still negative, right? So not a macro reversal, it is just a pullback. Okay, it could be wave 1, right, of wave 3 on the macro level, meaning like that was our wave 1 right here, that's wave 2. So this one could be wave 1 of the next wave to the upside, something like that. Okay, that's possible also, right? That is very, very possible. All right, all right. So let's take a look at a few alt I've been looking at over the last few weeks, right? So the first one is Tether. So Tether, it has a very complex but nice pattern, depending on how you want to look at it. If you want to look at it in terms of pattern, not in terms of Elliott wave, you got a potential, you know, inverse head and shoulder pattern with resistance around our February highs, right? Just by like 125 to 130. If we break it, we got our monthly 21ema potential resistance all the way up to $2, right? So accumulation range 105 to 95 range, right? If it breaks it, yeah, it could fail, right? It could fail and retest the yearly low just by like a $70 before creating, you know, a potential Elliott wave pattern, right? In terms of Elliott wave, you already got a 5-wave structure right here. It is a clean 5-wave structure, right? And we got a corrective wave right here to the downside. So this could also be a wave 3. You know, if you want to look at it in terms of Elliott wave, you could also look at it in terms of like a 1.618 extension to the upside. It'll take you all the way up to 250. If you want to take it moderately, 1.27 gonna take us all the way up to $2. Okay, all right. So it all depends on how you want to look at it, but I'm just gonna keep it very simple, all right, and just look at it in terms of a inverse head and shoulder, right? Because Leroy will catch that one. This one, we got our left shoulder, big head. Now we're getting our right shoulder. If we break it 1-to-1 extension to the upside, will take you even, you know, up to 250. Same thing. It doesn't matter if you look at it in terms of wave analysis or in terms of patterns, right? They both yielding the same potential move. Okay, so but it has to hold the 105 to a 95. That's just the caveat. It has to basically hold the 105 to 95. Okay, for it to be able to go up to like a 225 range. Even up to 160 is still good. Okay, let's take a look at EOS. So EOS, it's not printing yet. You know, it didn't print I mean, you could look at it as an inverse head and shoulder also right there. Okay, you could look at it as an inverse head and shoulder. You got your neckline, right? 1-to-1 extension, just like that. If you want to keep it very simple, you know, it is calling for our target, right? But if you want to look at it in terms of wave analysis, right, you could just keep it very, very simple as a double top, double bottom, because we don't know if it is going to be an ABC correction or if this is going to be wave 1, that's our wave 2, and this could be our wave 3. But since like we're not in a macro reversal, I wouldn't shoot up, you know, this high and looking for like a 1.618 extension, right? 1.618 extension of our wave 1 going to be all the way up to like a 350. So since we're not in a reversal, macro reversal yet, it's better to basically just say resistance right here, and we will see if it will be able to continue to the upside later on. And then we just invalidate the double top, double bottom and start to look for 1, 2, 3, 4, and 5. Okay, but the main thing I'm going to be looking for is it is going to be the 190 to 210 area. $1 to 95 range going to be the primary support to hold. If not, it'll go all the way down to the range, you know, and consolidate and possibly print another pattern where this one going to be 1 2 and this one going to 1 2 3 4 5. So it's hard to tell which one going to be printing out, which one going to get printed out. But the main thing is like $2 is a primary resistance if you accumulate it at $1 range. Okay, now let's take a look at ADA USDT. So, and once again guys, none of these patterns, right, I'm not looking for like 100x, 200x, 300x and all that good stuff, right? It is just like short to medium term, the next like a 3 to 6 weeks, right? Because we've been saying 4 to 8 weeks for the last 2 weeks, right? The next 3 to 6, you know, 6 weeks, maximum 8 weeks, right? So, because if they fail, they just gonna have to retest the yearly low, right? ADA, just like, you know, just like XRP, that did have a resistance around like, ooh, that's a nice pattern right here though. You know, 38 to 42 does have a, you know, nice inverse head and shoulder if you want to look at it that way. 120 extension, you know, gonna take us all the way up to like 80 cents. However, we got our monthly 21 around like us in the 60s, so I don't think it will break the monthly 21 and stay there and stay above it for like a few months, right? If it hits it, it'll crash down. All right. So let's take a look at the link. So link, it does have a nice consolidation. It looks, excuse me guys, it looks really good on the 2 weeks time frame, because you're going to filter all the noise. So if you take a look at it on the 2 weeks time frame, it looks like EOS on the 3D, right? So you got your impulsive move to the upside, you got your 3-way move down right here, and now we could be looking for a double top, double bottom, or even a possible like a 5-way structure, right? But has to take out the monthly 21-EMA first, you know, around like $11 to $13 before we start to speculate about a 5-way structure to the upside, right? Because if it gets rejected right here around like $9, $11, $12, whatever, right, depending on volatility, this could be a possible continuation pattern where it does retest, you know, the lower prices, or even just retest the lows and print a triple bottom. So I don't know which one will play out really. The best thing to do is just, you know, follow the trend and wait for market to print something probable, and you go for it. Because we are in a, you know, some of these alt, right? BTC probably already done with the bear market, right? Some of these alt, they are still in a bear market, so their volatility, you know, in terms of time and price, going to be pretty low. They're not going to be pumping, you know, pumping like 10, 20x in like a, you know, in like a, you know, a month, 2 months, right? Or they're not going to be pumping like a 30%, 40% in a day, you know, also, right? So, but they could be ramping up easily. Some of them will pump like 50%, like, you know, in one day, right? I'm not saying not all of them. I'm not saying all of them won't pump, but some of them will pump like 50%, like ICX. Hit, you know, excuse me, it hit its monthly 21-EMA and basically reverse back down. So, you know, if you're holding any of these alt and they hit their monthly 21-EMA, the risk is very high above the monthly 21-EMA. Very few alt, maybe like 1 or 2% of these alt are managing to stay above their monthly 21-EMA. So you don't want to take any risk holding a big bag. I'm not telling you what to do. I'm just showing you what I see in the market, right? You don't want to be holding, like, for instance, Link, like a massive bag above like a, you know, $10, $12. It could go, you know, if you're looking for the next 2, 3, 4 years, yes, I mean, you don't care, you just hold it. But if you're just doing trading from like a $5, $6 up to like $11, $12, you have to take your bags and maybe put it into BTC and see what BTC will does against Link. If Link loses value against BTC, you can buy it back, right? If it doesn't lose value against BTC, it could move sideways. So if BTC goes 10%, it'll go 10%. So you're not losing anything. A good example is like ICX. So if you take a look at ICX BTC, it pumped back up to its like a monthly 21 and hit the resistance level right here, right? 1400. If you've been watching us long enough, you know 1400 range was a big support for ICX, right? So hit the 1400 up to like even like a 1800 range on OKX, got rejected back down. All right, if you take a look at ICX USDT, just hit the monthly 21 EMA right here, got rejected. Right, so it could try to go back above it, but man, I'm not sure if ICX will do something like that. Okay, I'm not sure. Okay, we'll give it like a few more months, like a couple of more months, like till September, October, to see if you know, it will print a top formation right here and retest the bottom again before, you know, 2024, where you're going to be looking for accumulation and a possible you know, reversal, something like that, right? Not saying it will go up to like all-time high and all that good stuff, but you know, just any type of five-way structure basically. All right, so let's take a look at WOO So I mean, it is holding pretty strongly, right? So might just keep on accumulating it for the next, like, not financial advice, right, but for the next like a few months, right? So the worst case scenario is like it comes down to like 100 sats, you know, before the before the start of the macro bull market. It might be after BTC breaks all-time high if it's going to hit these lows, right? So let's take a look at audio. Yeah, audio got muted. No, it's not muted actually. Let's do this. It's not going to print something like that. So yeah, it retested nearly 0.888. MACD is bullish, price action is bullish, RSI is bullish, right? Where's your monthly 21? It is at 71 cents. So if we hit these you know, if we hit anywhere around like a 70 to a, you know, 60s to 70s range, might be looking for another correction after that. Okay, could be very choppy coming back down to the lows for the next like you know, 6 to 12 months, give or take. Yeah, I just talked about ADA. You know, we just talked about ADA actually. So if you haven't watched my you know, update, the DXY update a few hours ago, make sure to follow me on TradingView, and I just updated a public one. It was a premium update, but I just decided to share it. Okay. Yeah, ADA, we just talked about ADA, right? That 42 cents, right, was our previous support during Q2, Q3 2022, right? Acting as resistance. Does have a nice inverse head and shoulder. Last time I traded ADA in terms of head and shoulder, inverse head and shoulder was like back in 2019. That was ADA BTC. I think it broke out to like a 1970s sats back then. So since then, I did not look at it in terms of head and shoulder. Yes, it is a, you know, it is a plausible head and shoulder pattern. So 120 extension is super bullish, right? Looking at like 78, something like that. However, you know, you got your monthly 21 EMA around like a 61. So I'm not sure if it basically breakout above the monthly 2-1. So don't, you know, I wouldn't basically be too bullish as soon as it gets to like the monthly 2-1, because the risk once again of any of these alt, regardless of which one, staying above the monthly 2-1 is not going to be in favor of the I mean, the risk basically going to be high, right? The bullishness is not going to be very high. I said it in my premium when it was like in the mid 30s, to look for the 61, 67 range. Just like XRP did have a big resistance at 42, right? All right, Quiet Kid. Quiet Kid is just joking. He's not my cousin now. But I tell my cousin to be buying BTC at 180. $88 take profit 161, take profit 271. I don't know. I don't know about 188 going up to those highs, man. I don't know. I don't know, man. Let's take a look at the monthly 21 SMA. I mean, I could be totally wrong, but yeah, you got your monthly 20 SMA right around like a 78 cents. So, if you shoot up above the monthly 21-EMA, yeah, you could be looking for the 21-20 SMA range at 80, but $1 and all that good stuff, maybe in 20 years. Maybe down the road, basically, but not on this move. I mean, I'm not saying it cannot. All I'm saying is the probability is not high. So Dogecoin, I already gave a Doge macro analysis, right? I already gave the Doge macro analysis. Getting rejected at the monthly 21. What I'm thinking is like for Doge, sideways correction, between 16 cents, right, to 15, 17 cents right here. Okay, over the next over the next 9-12 months, right? So if it hits anywhere around like 15, 14 and all that good stuff, I said it back in October after we hit the monthly 21, because in our premium we were saying Doge is a support 6 cents, 5 cents range, accumulation range. Once we hit the monthly 21, just have to get out, right, and reaccumulate again 5-7 cents. That's exactly what it did. So if it goes back up to the to like even 13 cents, right, holding it above 13 cents might be very risky in the short to medium term. However, for bulls, right, for the macro bulls, like the next 18 month, right, let's say 24 month, up to 24 month, if BTC is to break like all-time high, Dogecoin most likely going to break out above the 15 cents later on and try to shoot up to the next macro price level. Okay. So, but it looks good on the macro level, right? Even on the lower degree, it looks good, But I just don't see a macro breakout above all-time high at any given time in 2023. Unless something like really good happens, right? And we just, get a new macro bull trend. But other than that, it's just under accumulation. If it's short-term trading it like 15%, 20%, that's different. But if you're looking for the macro or the next macro, 20, 30, 40, 50x, you just have to be very patient, right? And accumulate the dips right here. If it goes down to 3 cents, it might not stay there too long. Once again, because we already got our WXY correction. The worst case scenario is like we get a WX Wmacd correction. That's the worst case scenario. But as of now, it seems like we already got our, you know, W, X, and Y correction. Okay. Okay. Something like that. Yeah, for the macro, I mean, I think it is at a very good time to be buying. Not financial advice, right? But you know, I just don't have time to go through the time analysis for Dodge. But you know, if you were in my premium, you know, I've been talking about Dodge like over the last 2 years, right? Even after it hits right there, you know, back in May, I started talking about Dodge and the monthly 21-EMA, the 50-D 21, and all that good stuff. I started to talk about it, right? So now we just sitting above the 50-D 50, so, and the monthly and the 50-D 21 squeezing the price right here. So any capitulation or any FOMO dump and all that good stuff, just have to stick with the plan. You know, when Dodge was right here, I was saying like we're gonna drop down to like 5-7 cents. When I was saying it, Dodge was like around 20 cents, 21 cents. Now, what macro target fibs? We'll have to wait. Okay, we'll have to wait because you could get any type of we'll have to wait to make sure, right? The 5 cents going to be the support, but I wouldn't be looking for like I mean, to the upside. If you're looking forward to the upside, I wouldn't be looking for like you know, let's say 1.618 extension or like 120 extension of the previous macro pump. You know, 618 to 0.786 is a good range. You know, 250, you know, to $6, but I don't think it'll go to $6. Possibly $2 to $3 range. That's good enough, you know. But if it comes down to like a 3 cents, yes, it could go, you know, you could get your 0.618 to a 0.786 around like a 150 to a 450. However, if that's not what you're talking about, you're talking about the fibs to the downside, 0.618, it is at 3 cents. But as of now, you know, I think bulls, you know, I could be totally wrong and this guy could come down here. That's what I'm saying. The next 9 to, you know, I would say 9 to 12 months, right? By January 2024 or like, you know, February 2024, it could still be in this range, right? So any price dip in 2023 below 5 cents is still going to be add-on for the bulls, not financial advice and all that good stuff. David talking about DXY 100, yeah. Chani in the house. Alright guys, I'm just gonna call it a day. It's almost like over 1 hour 20 minutes and all that good stuff. Market probably going to be volatile going into May, but once we hit you know, once we you know, hit May, we just have to start to be cautious in terms of time. It could be bullish all the way up to June, but the probability of making high highs and high lows starting from May going to be very not very low, but it's going to be lower, right, than the probability of making lower lows and lower highs. So we'll see how it goes. We talked about it back in November. If you were in our you know, premium group or even in our public group, right? I was saying on the macro level, I was even showing like the rainbow chart, right? The rainbow chart was saying like we bottomed, right? You know, BTC hit our 50% pullback on the macro level, right? We hit our 50% pullback. We got a 40% pump. So bears were in denial after the 40% pump. Right, so I was bearish the entire sideways correction right here till November, right? on the macro level, I was bullish. Okay, after the 40% pump right here, I was saying, guys, you know, a 40% pump after 80% drop in 1 month, right? A 40% pump in 1 month is generally bullish for BTC. It's one of the biggest 40% pump from the bottom, right? So no need to be macro bearish looking for 3K, 4K. Price was already down for like a year, down like 77%, right? So no need to be bearish after 77%, because if you're looking for the same exact thing as it did back in 2018, you weren't gonna get it, because 2018 it only dropped like 84-83%. Was you waiting for the extra 6%? I don't know. Okay, if you go back to 2013, 2014, 2015 range, it dropped 87%. So even though we're getting diminishing return in terms of gains, right, we're also getting diminishing losses in terms of dumping and getting wrecked. So more people will get wrecked, but they will get wrecked less. Basically, that's what BTC is doing. So it is saying like, if you buy me at the next all-time high, I'm not going to drop 77%, but I might drop 70%. Right? So if you're waiting for me to drop more than 77% or like a 77% in 2026, I'm going to reverse back up and make a new all-time high. That's exactly what he's doing. Okay, so we'll see how it goes, right, over the next like a few months. The most important, once again, was like to start making these high lows and high highs in 2023. Take out the monthly 21. So the job is nearly done, right? The job is done for the bulls. So it's not time to be getting excited. It's not time to be FOMOing. It's just time to relax, right? And watch all the bears flipping bulls over the next like 4 to 6 weeks. They're gonna be like, we broke out above 30K. You know, you're gonna be like, Send Crypto said it long time ago, 6 months ago. Buy the dips. We're gonna break out above the monthly 21-EMA. I wasn't saying it with absolute certainty, right? But I was saying that we had, we're going to have a good probability to retest our monthly 21. And once we break it, we will start to follow our Fibonacci's. I was very clear about it, right? Very, very clear about the monthly 21. Now I've been saying it nearly every single week. I was making sure, people will remember the monthly 21 before we get there. And I was saying it, but when price is like 50% below your target for